Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Thanks for joining us as we get going on this shortened week. Let's get across what happened overnight. Global stocks climbing for a fourth straight session on Monday, while gold surged to a new record above $5,100 an ounce. On Wall Street, US stocks were higher, buoyed in part by gains in the S&P communications services and tech sectors, with investors awaiting earnings from a host of mega cap stocks. And there are high expectations ahead of the Federal Reserve's interest rate decision later this week. Among the gains, AI hyperscalers boosted the S&P, Apple, Meta, Alphabet, Broadcom, all rising along with Microsoft. And Apple, Meta, Microsoft and Tesla are due to report quarterly results later this week, with investors looking for signs of measurable payoffs from AI spending amid concerns over high valuations. Shares of chipmaker Intel have continued falling, having lost some 17% on Friday for their steepest drop in nearly 18 months after the company forecast quarterly profit and revenue below estimates. CoreWeave shares jumped after Nvidia said it would invest $2 billion in the cloud infrastructure firm. Airline stocks, they paired earlier losses as they dealt with the aftermath of mass disruptions in flight schedules after a massive winter storm hit the eastern United States. Shares of US rare earths surged on reports that the US administration is taking a 10% stake in the miner as part of a $1.6 billion debt and equity investment package. And shares of the gold miners rose as bullion price soared above $5,000 an ounce. And US listed shares of BHP and Rio tracked a higher copper price. Well, US President Donald Trump has threatened to impose a 100% tariff on Canadian exports to the US if it follows through on a trade deal with China. The Canadian Prime Minister this month travelled to China to reset the country's strained relationship and reached a trade deal with Canada's second biggest trading partner after the US. Well, meanwhile, in the US, new orders for key manufactured capital goods increased more than expected in November, rising 5.3%, suggesting business spending on equipment maintained a steady growth pace in the fourth quarter. The yield on the benchmark 10-year Treasury note slightly lower as markets assess key events this week, including the Fed's decision. The yield on the 10-year falling around 2 basis points to 4.21. The 2-year is close to 3.6% ahead of a $69 billion auction. And the US dollar fell across the board, the Japanese yen jumping to a more than 2-month high as speculation mounts about joint US-Japan currency intervention. The Aussie, meanwhile, has continued its ascent, climbing above 69 US cents to be at 69.1. Well, oil prices are slightly lower after climbing more than 2% the previous session as investors consider the impact on output in US crude producing regions from winter storms and the impact of any tensions between the US and Iran. Crude futures down around 0.5% at $65 a barrel. Gold briefly broke through $5,100 an ounce, while silver topped $114 an ounce, and platinum also scaling all-time highs as investors seek a safe haven amid international political tension. Spot gold has retreated a little since then, currently sitting at around $5,050 an ounce. Goldman Sachs saying that risk appetite is now very elevated, with the firm's risk appetite indicator at its highest level since 2021, adding to that momentum we've seen in precious metals. And Bitcoin is trading at around $88,000. All right, let's get across those market moves. Steve Sosnick is joining us from Interactive Brokers. Steve, I hope you're keeping warm there. So obviously you're bearing the brunt of those winter storms. We're seeing that play out, particularly in oil prices, as I mentioned there. Interesting what's going on at the moment. Obviously the geopolitical moves, of course. Precious metals, quite something to behold, isn't it?
Good morning, Andrew, and I hope you had a nice holiday. Well, I was digging out of about a half a meter of snow here. Precious metals have just taken on a life of their own at this point. I mean, they've become a momentum trade. Someone asked me earlier today, has silver become a new meme stock? I'm not going to go that far because the motivations are different. There's not the us versus them, but it has become a tremendous momentum play among hot money investors. It's among the SLV ETF is consistently among the most active stocks on our platform now. And you could see the type of moves. Today we were up at one point over 14%, and then maybe only up 4%, then closed up about 6%. But it's all over the place, and you could just feel that there's this frenzy. And as you noted, it's spilling into gold to a certain extent. I think it started in gold and then spilled into silver, but it's also starting to be reflected in things like copper, aluminum, and those have an effect on inflation. It's gold and silver, maybe not so much, but copper, aluminum, if those start to filter through, that presents a potential problem for an inflation-fighting Fed.
All right. Well, to that point, then, of course, with the Fed meeting later this week, what are the expectations?
Absolutely nothing. So that's not to minimize the point of the FOMC meeting, but literally expectations are about 2% for any sort of rate action. The questions will be, what is the tone at the press conference? Does the chairman get bogged down in questions about politics? About the video that he put out about attending Lisa Cook's Supreme Court hearing, about his term being over soon and being a lame duck and potentially staying on as a governor. All these are the type of things that I think will consume a lot of the questions rather than monetary policy to a certain extent. But again, we're going to see who's dissenting and how aggressively, and whether we can learn anything new about the path of rates as the rest of the committee projects them.
Meanwhile, Steve, on the equities front, it's a big week ahead. A number of results there coming from some of those, particularly those AI hyperscalers. And well, look, I mean, it's going to be based on those fundamentals, but of course, we're looking for that guidance too. What some of those companies, including Meta, Microsoft, Tesla as well?
Yeah, I mean, we have the Fed meeting at 2 p.m. Eastern time, the press conference at 2:30, which ends typically around 3:30. Then sometime after 4 p.m., we get Meta, Microsoft, and Tesla. How's that for an afternoon? So whoever your Thursday morning guest is going to have plenty to talk about. And this is really, to me, it's a fascinating sentiment because we're seeing Meta, Microsoft, some of these other stocks lift into earnings, which to me, in some ways, can be dangerous because it raises the bar that these companies have to cross or that they have to hurdle over. That can be problematic. And again, it's become very much a situation where it's less about what they say for the prior quarter than what they're saying about future quarters, especially when it comes to AI spend and AI revenue predictions. And also, not to lose sight of it, while we talk about these big stocks, which are representing, a plurality of the weight of the S&P 500, we have literally 124, so just a tick under 25% of the S&P 500 stocks reporting this week. There's a lot for this market to digest. And interestingly, VIX isn't really reacting to it. The 9-day VIX 9D, is reacting a little, but nobody's pricing in too much volatility with all these potential catalysts. Maybe the thought is that they're all going to balance each other out and we end up no place, but we'll have to see.
So you're just a little wary perhaps of investor complacency, if you like, at the moment.
I do think we're wary of investor complacency. I mean, pretty much anyone you talk to, has a bullish scenario. Now, to be fair, the economy has been doing well. Inflation has been relatively controlled. Those are good things. The geopolitical potholes tend to get paved over relatively quickly. I wish I had a taco for every time that somebody mentioned the word taco to me last week. That was sort of a self-inflicted error on the European tariff front that was quickly corrected. And today the market's pretty much ignored the latest tariff threat toward Canada. I've not really seen a reaction yet to the latest one against South Korea. But we just keep reacting to these things or not reacting to them. So I do have to think that at some point, all this geopolitical craziness does start to add up. Plus it was a very stressful weekend politically in the U.S. With the situation in Minneapolis with the bystander getting shot by immigration agents. I don't want to go into the details of that one, but it's a very tense situation here politically, but markets are shrugging it all off because, again, the momentum is working and the earnings seem to be delivering, at least past earnings, if not guidance. So the markets seem relatively unperturbed.
Well, Steve, we look forward to unpacking more of that when we catch up with you again this time next week. We'll leave it there. You made a point earlier there. The internet is clearly under a bit of strain your way there at the moment, given everyone's working from home, given you're snowed in. Good luck with the digging. Thanks for joining us from Interactive Brokers.
Thanks so much, Andrew. Take care.
All right, let's turn our attention to the local market then. Expecting a strong start. Let's take a look at the ASX futures there, up close to 0.5%. We're also going to get a read on NAB business. It's going to be released 11:30 Eastern, so I'll get across that when it drops as well. Stay with us. The Open, just a minute or two away.